Hello everyone and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today, the editor-in-chief of InsiderFinancial.com, and in this video we will recap last week's market action and discuss our game plan for this week. But first up, to get our market moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on InsiderFinancial.com. If you sign up with your email, you can sign up with your mobile number. Mobile is the fastest way to get all of our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, it'll be 1 plus area code and number. Never begin the format with 0. It will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging service are all free services from InsiderFinancial.com. We do not run any paid subscription service whatsoever, no Discord rooms or Telegram chat rooms. With that out of the way, let's dive in here, folks. Well, the S&P on Friday advanced 3.48% for the week to close at 4109. It posted gains in 4 out of 5 sessions. The weekly performance was the benchmark index best since early November last year. Sentiment was helped by a combination of factors. There's receding fears over a financial contagion after no fresh news regarding the banking crisis. Renewed buying in growth stocks such as consumer discretionary and technology, and favorable economic data that strengthened the case for the Federal Reserve to consider ending its rate hiking campaign. With financial regulators and other lenders stepping in with measures to stem a fallout from the worst banking crisis in 14 and a half years, investors appeared to regain their risk-on appetite during the week. The Senate Banking Committee also held a hearing on the recent bank closures, which shone a spotlight on failures in the overall regulatory system. Focus during the week shifted back from financial stability to the Fed's policy direction. Market participants made bets that the central bank would be unwilling to raise rates further amid the banking crisis. Moreover, economic data in the form of a rise in weekly jobless claims, along with a moderation in March's core personal consumption, core PCE index, which is the Fed's preferred inflation gauge, bolstered the case for an end to interest rate hikes. Fed speakers during the week continued to remain cautious, however, signaling that inflationary pressures were still high and the central bank was keeping the door open for continued rate hikes. According to the CME FedWatch tool, markets are now pricing in a 52% probability of no hike at the central bank's monetary policy committee meeting in May, while the chances of a 25 basis point rate hike is around 48%. More importantly, the markets appear to believe that the peak interest rate would now top out at 5% to 5.25% from the current level of 4.75% to 5%. The risk-on mood during the week led to traders snapping up tech stocks as the QQQ continues to outperform the SPY. Aside from the FANG group, chip and semiconductor companies also saw major buying. We saw a surge in shares of Micron, Intel, NVIDIA, and AMD are all trading, AMD and NVIDIA particularly trading near recent highs. The renewed interest in technology stock helped push the NASDAQ 100 back into a bull market territory, with the index having climbed more than 20% from its lowest closing level in December. The tech-heavy gauge also logged its best quarterly performance on Friday since June 2020. In other economic data during the week, the big concerns for the housing sector failed to materialize, with pending home sales rising for a third straight month in February and mortgage applications increasing over the week. This week we have a lot of data. On Monday, we get ISM manufacturing data. On Tuesday, JOLTS job openings, which the Fed closely watches. On Wednesday, we get ISM non-manufacturing. Then on Thursday, there's initial jobless claims. And then on Friday, the U.S. jobs report for March will be released despite the stock market being closed for Good Friday. Non-farm payrolls are expected to rise by 240,000 for the month after a 311,000 increase in February and a 517,000 revised jump in January. The unemployment rate is seen holding steady at 3.6%. Average hourly earnings are expected to rise 0.3% month over month, but the year-over-year rate is forecast to moderate to plus 4.3% from plus 4.6% in February. In risk-on sentiment, I talked about Tesla a lot. I mean, it is the overall indicator if we're in a bull market or not. Tesla reported today that it delivered 422,875 vehicles in Q1 to edge past the consensus expectation for 421.2 thousand deliveries. The electric vehicle maker produced 440,808 vehicles during the quarter. Both the production and delivery numbers were subject to an operating lease accounting shift of 5%. The company said we continue to transition towards a more even regional mix of vehicle builds, including the Model S/X vehicles in transit to the Middle East and Asia. Tesla will be reporting its full Q1 earnings on April 19th and has an earnings call scheduled for 4:30 p.m. that day. Last week's big winners that I covered on this channel were PALI, up 114% for the week, and BRDS up 86% for the week. Congratulations if you caught any of this move. On our Thursday night video, talked about a couple names. I said INPX closed up 16%, and then you had the Trump names. DWAC closed up just under 8%, and RUM just over 7%. With Trump being arraigned on Tuesday and him continuing to post only on his Truth Social, that is putting all the eyes of the world on Truth Social, what he has to say there. So hopefully that SPAC deal can get closed by the September 8th deadline. Rumble, Don Jr. has an exclusive with Rumble. So again, everyone is tuning into these conservative media stocks. On Thursday night, I told everyone PYXX. After the big run-up, I said profit taking was likely. RSI was extremely overbought, and congrats if you listened to me and was able to take some money off the table. Please don't say, oh, you were spreading FUD. No, I just said it's profit taking. I said the RSI was overbought. Trust me, my following is not huge enough that I had an impact on PYXX stock. If you did, you're pretty stupid. So again, don't be posting that stupid comment. I'm just going to delete you and block you. So get a clue about how markets work. Stocks go up, stocks go down. Our job here is to educate and to help you guys make as much money as possible. Again, we are not financial advisors. But the big names last week continuing to work. AI stocks are just absolutely on fire. We covered these on March 21st. We put out a report to subscribers. AI stocks finding a bottom. AI, SBIG, SOUN, FNGR, XALL. And if you followed our report, AI was just 2167 that day, closed at 3357 on Friday, and SOUN was just $1.62 when that report dropped, and today on Friday it closed at 276. SBIG, FNGR still haven't made a move, but these are on our radar screen this week. Also, other names in the AI sector making big moves: BBAI and GFAI. These are all short squeeze, low float potential movers, so certainly pay attention to these. We're also watching two names that I've covered a lot on this channel, EVGO and CVNA, as two potential short squeeze names. With the overall market in bull territory, it's certainly we can start seeing these short squeeze names start taking off. EVGO has 34% of the float is short, making a nice move here, and CVNA has 48% of the float short. So again, major squeeze potential here. Put them on your radar screen. Again, none of this is buy, sell recommendations. This is about giving you the education, giving you the news, covering these hot runners, and letting you know what's happening. We also are doing a lot of research right now, looking for a big winner to kick off April. If you guys have any suggestions on a stock that you really like, it must be a small cap on the NASDAQ or NYSE, no OTC. I'm not even going to waste my time on any OTC plays, guys. It's just garbage right now, wasting your time. But leave a comment below with the stock, why you like it, or just the symbol. I covered, I'm always running screens, looking at, thousands of stocks every week. So please, chances are I'll be familiar with it. And then it gets it back on my radar so I can start looking at it. So leave a comment below if you want our in-depth research on one of your plays. Certainly might hit our radar screen. But again, if you want those reports, the only way to get our reports is by clicking that link in the description or going to signup.insiderfinancial.com. We've been delivering bangers for our subscribers, so click that link in the description. Sign up with your email and your mobile. Mobile is the fastest way to get our alerts. You can even sign up and unsubscribe just to see the level of research that we do here at InsiderFinancial.com. We don't spam. Your info is never shared. Again, unsubscribe anytime. Finally, guys, Insider Financial and myself are not investment advisors. This video does not provide investment advice. Always do your own research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinions meant for informational and educational purposes only and does not provide investment advice. Past performance is not indicative of future performance. Thanks for watching. Also, smash that like button and hit the notification bell to be notified when a new video is uploaded. Good luck, guys. Bye-bye.